Hi everyone, today let's talk about the non-farm payrolls. Then we'll get straight into the charts, and we finally have a little bit of bearish price action to talk about. And as a result, it would appear I made a little bit of money today, finally. So we'll talk about that and my positions going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So non-farm payrolls were way higher than expected, ridiculously high, up at 517,000 for January. You can see here they have the forecasted numbers at 185,000. The previous number was 260,000, and what we actually got was 517,000. Just an absolutely ridiculous number of jobs and more than double the estimated value. So the labor market remains incredibly strong. The unemployment rate went down to 3.4%, down from 3.6%. We were expecting a 0.1% rise in unemployment. We actually went down 0.2%. And in the beginning, the markets were a little bit bearish on this. They were also down from pretty bad earnings yesterday. We talked about that already quite a bit. And this certainly didn't help. There's definitely a little bit of confusion. This definitely gives the Fed the right to be more aggressive. They can continue to raise rates. The markets didn't really seem to care about that a lot early on. They did rally into the open. We kind of think we know what the Fed is going to do going forward, and this doesn't seem to shift that much. And you can actually argue that this gives you a better chance of a soft landing. So we're getting higher rates. We knew that was coming, but we're not seeing the job losses that we thought we would. Despite the expectations that the job market would get a little bit weaker, we've seen lots of companies talking about job losses. It just hasn't materialized yet. We continue to see strong job growth, low unemployment rates, and earnings that aren't too bad. So it seems like we're going to get a soft landing so far. All of the data points to that. That's really what we have to operate under until we get anything besides that. They also talk about hourly earnings going up 0.3%, which is a moderate pace. We're not seeing wages go crazy, which is good. And then they talk about the unemployment rate once more here at 3.4%, and participation in the labor force ticking up slightly up to 62.4 versus 62.3. So strong job participation, again signaling that we might get a soft landing and maybe not a recession later in the year. Moving over to the charts, starting with the S&P 500 on the 15 and the hourly. So we did get some bearish price action. You can see we have a high yesterday, sold off into the earnings yesterday, got all the way down to 411.15, 411 flat in that vicinity here. Rallied into the open, filled the gaps, got a little bit higher here, all the way up to 416, and then sold off basically throughout the session into the after hours. So it looks like we have a little bit of a topping formation. You can see that on both charts here. We do have a bottom that we do have to watch out for at 411. Still could be support. Did act as support here into the end of the day. Really, we're going to be looking for a breakdown of that level. We could certainly go sideways for quite a while. You can see the longer term EMAs and SMAs are continuing to rise on both charts. Are quite extended, so even if we do get a retest of these levels on the hourly, that would be a push all the way down to around 403, maybe 400. That would be a pretty big drop just to retest these stronger trend lines. Certainly possible. You can see we've been testing the 144 EMA multiple times on this rally, and it seems like that's what we should be looking for based on this structure that has been manifesting within the last 2 days. So overall, slight bearishness, but the structure is still bullish. You can probably trade this bearishly for the next day or two until we come back and retest these longer term EMAs on the hourly chart. And then once we get that test, then we need to see what we're going to get. If we get a move similar to what we had on Monday and Tuesday, where we tested those levels and then rocketed up, we could certainly get a continuation to this trend. But right now, the short-term trend is slightly bearish. I know a lot of people have been looking for that bearish price action. We're getting a little bit of that, but don't get too excited yet. We still have some structures that we need to break down before this turns into a fully bearish trend. Moving over to the NASDAQ on the hour and the 4 hour, let's look at those higher time frames just for a moment. Starting with the hour here, you can see we topped out at 313.50, 314, right in that vicinity. Strong resistance there. Sold off into earnings. Tested that range once again and then got rejection. We're right on this longer term support level. You can see this is the trend line that's been maintaining our upper bound. Certainly possible that we bounce from here. Could be a retest of that trend and then a continuation. Definitely a possible scenario. It's worth noting that momentum on the 4-hour is pretty dramatically bearish. It's been consistently stepping down over the last 5 candles. We're also getting lower highs on RSI, and you would expect this to continue into some bearishness, potentially a retest of the 21 EMA on the 4-hour chart. That should be somewhere around $300, which would be about $6 of downward price action from here. Absolutely possible. About 2.5% of downward price action potential. Coincides with the 55 EMA on the hourly chart, right in that same range, 300 to 301. We are right at the 50 line on the hourly, so we could certainly get a little bit of a bounce as long as we establish a lower high, potentially in that 309 level, maybe a little bit higher, 310, somewhere in that vicinity. Get rejection, push through these support lines, and then we have to see where we're going to land. Again, let's not forget this structure is still very bullish. We got a huge run. Looks like we had a little bit of a top. We just got overextended. Could certainly come back in, test support, and continue. I'm definitely not saying that we're just going straight down from here and that we're going to go test the October lows, get all the way down to 255. That's not what I'm saying. Just be aware that we do have some bearish price action, probably looking to retest some of these support levels. And then we have to see what the tape gives us. And remember to always trade the tape. Don't fight the tape. Otherwise, you're going to get squeezed like I did on this up move. Moving over here to the Russell and the Dow, you can see the Russell did sell off just a little bit like the others, got all the way up to 199.20. Then we came down to 196.94, so down just a little bit, not a lot. Doesn't have nearly as far to go to these other EMAs on the 4-hour, down to maybe 193 for support. Definitely would be interesting to see what happens there. If we do come down and touch the 55, that would be much lower at 189, 190, somewhere in this zone. Might take a day or two to get there, so keep an eye on that, but that's what I'm looking for at support. And then the Dow really just has not done much of anything over the last couple days. We're right on support, looking to see if this holds. This does roll over and we get through the support line, then you've got to be looking for maybe 336.50, 335 in this zone. We just didn't get quite as extended here, so it doesn't have a lot of room to fall. 335, 336, probably the next levels of support that I would be looking for. Moving over to Apple and Tesla, let's put these both on the daily charts here. Looking at Apple, this just looks bananas here. So we had another huge rally day. It did not sell off at all, through a huge wick to the upside. Tested a lot of these highs, going all the way back to the high from 28 October at 157. Did sell off a little bit, throwing quite a large wick to the upside. And if this does start to break down, that will accelerate the move lower on the NASDAQ and the SPY. You can see momentum here on the daily chart still building. Very overbought here on the daily chart. Similarly, Tesla did not post a red day, was up slightly, did get into overbought conditions, but it did give you that down step on daily momentum. And even if we come back down and test the 9 EMAs on these daily charts, that's quite a bit of downward potential here. The daily 9 EMA on Tesla is down at 170, which is $20 of downward potential. And for Apple, it's down at 145.81. Obviously, these will trend up over the next few days, depending on what the price action shows. But regardless, that's showing between $10 and $20 of downward price action just to test the 9 EMAs on these daily charts. So certainly possible. It does not mean that it's going to turn around and come down and test them right away. Could certainly do what we did here on the down move, where we just continued down really strongly until we found that bottoming process, and then we came up and tested, which ended up being about $4 to $5 of upward price action to test that 9 EMA. It's also worth noting that we did continue in this downtrend all the way up until we almost got that first green bar of momentum. So we can continue in this decreasing momentum to the downside while trending down. And then you get close to that green pop, and then you get the green bar of momentum, and then you move higher. So certainly possible that we see that. But overall, Apple and Tesla not participating in the down move here today. Moving over to consumer staples and consumer discretionary, you can see discretionary filled that gap, got all the way down to the 9 EMA on the 4-hour chart. Would be looking for that test of the 147.30 level. That would be the 21 EMA, as well as a strong level of support and resistance. So we came up, tested that level and failed, came up, retested that level, and then got the continuation. So 147.30, definitely a level to look for, coinciding with that 21. Looking at consumer staples, you can see we downtrended, hit that 4-hour 200 SMA, then we bounced here slightly into the end of the day, different from the other major indices. Consumer staples continuing to look mildly bullish, while everything else seems to be rolling over. Moving over to transports on the 4-hour and the daily chart, this is still something that is not really showing what you would want to see. If you look at this on the 4-hour chart, you can see we threw a huge wick, did gap down, filled most of that gap, and then we sold off here into the end of the session just slightly. Looking at that daily chart, we did get an inside day, candle of indecision, could certainly roll over. And again, just like the major indices, if we come down and test that daily 9 EMA, that would be about $10 of downward price action. Did get to overbought conditions here on the daily chart yesterday. Did not get that step down on the daily chart though, so you could certainly see maybe another day or two of price action to the upside until we start to see this consistent step down or at least flat price action. Still watching to see what transports tell us, but holding up surprisingly strong here today. Moving over to semiconductors here on the hourly chart, I just wanted to highlight this trend line because we did have a similar situation here where we came in, tested this support, kind of bounced around it and rejected, and then we came back through it and continued downwards. So definitely a potential situation that we could see. Come back into this zone, bounce, and then get the continuation down. If we zoom out here, that's kind of what we're seeing right now already. So we came up through it. We're testing that support level, and if we do get an up day and a continuation, you do have to respect that as a very strong level of support going forward. Certainly possible that we gap through this and continue down, start testing these lower levels, coming down to maybe 234, testing the 144 EMA in that zone. Do have the 200 SMA down here all the way at 225.35. That'll trend up over the next couple days here, maybe up into this 233, 234 zone before we get down to test that level. That is what I think is going to happen. You can see momentum on the hourly continuing to trend down here. But really, it's going to be critical to see whether we get below this trend line or not. If we do, then you have to look for support at 240, 241, and then like we said before, 233, 234. But right now, we just have to watch this level basically right where we are. Moving over here to yields, looking at the 2-year yield, you can see we were basically flat yesterday and then really moved higher on the jobs report today, significantly higher. And this is really what's impacting the markets, in my opinion. If this does continue to move higher on the 2-year yield, that's certainly going to sink the markets. Let's go full screen on that. You can see now that we've broken above this basically 2.25 level that we've been looking at for quite a while here. Next level to look for is probably 4.75. And then if we get all the way up to 4.44, maybe all the way up to 4.5, that's definitely going to be very bearish. We were up in those levels basically to start January, and you can see we've been trending down throughout. If this is a bottom and a reversal here for the 2-year yield and we head back to 4.5, then that's definitely going to be bearish for markets, and we do have to keep an eye on that. You can see we are already very overbought on the 4-hour. Jump this up to the daily chart so you can get a better perspective. Basically, we've been pretty flat for quite a while, peaking out at about 4.88. If this does start to reject and move higher, like it looks like it might, we do have to keep an eye on that. We did get through the 50 on the RSI, which generally indicates you're going to see a little bit more bullish momentum. Moving to the 4-hour, similarly, almost overbought conditions, pushed through that 50 and went much higher. Did get above the 200 SMA here. So overall, looking mildly bullish here. A little bit extended, but definitely bullish. Moving over to the 10-year just for a moment, you can see similarly we did rally up, but we couldn't get above that 356 level. We've been talking about that for a while. Continues to be resistance here. Can't quite do it. If we do get a breakout above that level next week, that would definitely be bearish for stocks, so keep an eye on that. We do have that resistance trend line up here at 3.675. Could certainly look for a retest of that level. It's been strong resistance before where we had a huge downtrend from there. But if we do get up to that level, maybe come break through it, retest and continue, that would be very bearish for stocks and definitely something to keep an eye on. Moving over to the dollar, of course, as soon as I say the dollar hasn't been doing pretty much anything, it finally starts to move. So yesterday we gapped down, rallied back through the session, came up to resistance, And today we pushed through that resistance. Looking at the 4-hour chart, you can see we're right at the 200 SMA, sitting at 103.04. Tested that level here today. Definitely we'll have to watch where we open up on Monday, see if we hold this level and push through. Maybe we get back up to the 104.40 level, 105.50. That would be nice to see this going much higher. That would definitely be bearish for stocks. Looking at the daily chart, you can see we're through the 21 and the 9 here. Looks good. Definitely want to see this daily close stay up here. Don't want to see a sell-off into the close. That would put us through the 50 level on RSI on the daily chart as well, which would be pretty bullish. Looking for a retest of the 55 EMA, sitting basically at 104, slightly below resistance. So look for that test there. Wait to see what that reaction is. Could certainly push up and test these levels much higher than resistance if this does break through and start to retest the 144 and the 200 SMAs. But that's basically what we're looking for. So we got through 2 EMAs here on the daily. Look for that next test. A little bit of resistance between these here, and then looking to those next higher zones of resistance at the longer term averages. Moving over to JNK, you can see we got the island reversal, gapped up, stayed flat, gapped down, testing support. You can see we're basically at the upper range of this previous range that we were in, sitting at 93.70 and right on top of the 4-hour 21 EMA and the daily 9 EMA. If we are going to go lower here, you would want to see this break through the 21 EMA on the 4-hour, come down and retest the 55 EMA, sitting down just below these previous lows. This will continue to trend up here slightly, probably up into this 93 area. Come down, retest that level, probably get a bounce, come up and test the 9 and 21s once again, and then get the continuation to the downside. That's probably what would happen if this is a true reversal. But remember, the structure is still mildly bullish. We do have to get below these EMAs here. You can see we're above all of them right now, still indicating that we're in a bullish structure, but we are starting to see potential signs of reversal. Moving over to TLT on the hour and the daily chart, you can see we came up right into that 109 level, got rejected and sold off. Big gap down after hours. Obviously, the jobs report hurting the TLT quite a bit, which is expected. We saw yields go higher, the dollar went higher, and bonds went down. And we're right back into this range here. So we expected the first test of the 200 SMA on the daily chart to not be successful. Talked about that before, coming in, testing that. Expected it to fail, come back into this consolidation, maybe test it 1 or 2 more times. We are right on top of the hourly 200 SMA acting as support. Does seem to be holding right now down at 106.60, 106.65. If we bounce in here and come back up and test that 200 SMA 1 or 2 more times, you would eventually expect it to break, giving you the longer term turn to a more bullish price action on TLT. This still looks like we're trending higher, and my expectation is that this will break out at some point within the next week or 2. Finishing up the charts here with the VIX, you can see we're right at support. We're right at this mid-level trend line that we've been watching for a while. We stopped right there. It's going to bounce. You want it to bounce now. If we do get below this once again, that wouldn't be very good. We're also at the previous level of support from Friday the 27th. Again, you would want it to bounce right now. Didn't quite get up to that highest level of resistance, so move higher, retest, held, bounced, retest one more time. It holds here and we get a push through that level, then that should be a pretty good indicator that we're going to be moving lower and that this might be a little bit of a longer term or true reversal. Again, not solidified quite yet. Definitely need to see more continuation to the upside here. Retest of this upper trend, maybe a rejection and a continuation. Then you have the longer term averages that you have to get through. And then we're all the way up here to 22.55 for the next level of resistance. A lot has to happen for that to be true. So keep an eye on this. Does look mildly bullish here. But again, keep in mind this longer term downtrend that we've been seeing. And this could certainly just be another continuation of that. Moving over here to my accounts, you can see I finally made a few dollars. Finally, it's been a pretty rough week for me, not great, but markets moved down. I made a few bucks, more than $1 for every dollar of downward price action. So that's success in my book. Almost $800. NASDAQ was down 5.5. That's what I like to see. You can see I also sold some calls today. Did a little bit of day trading, did a little bit of options trading. Overall, pretty successful. These options will expire worthless as well, so there's a few more dollars in there for these 307 calls. I did sell some 309 calls, so I'm mildly bearish going into Monday as well. Think we'll probably see at least a little bit of an upswing, but probably going to get rejection and then continuation to the downside. If not, this might be a decent level to short. We talked about 309 being a level of resistance, maybe 310. This gives me the opportunity to short shares basically at 310 average with, if you take into account 309 strike with 94 cents credit. Trying to potentially get into some short shares there. We'll see what the price action looks like. Overall, mildly bearish for the next day or two. But of course, we do have some support levels that we do have to watch because of the longer term bullish structure. Let me know down in the comments if there's any charts you would like to see or what you think the markets are going to do going forward. Is this a true peak? Is this a reversal? Or is this just another short-term retest before we continue rocketing to the moon? Definitely like and subscribe if you got any value out of this video. I make these videos every single day the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future videos. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.